Good day, everyone. I am Ekamapol Yebuchi, a 300 level accounting student in Unisic. This is Buchi Accounting Tutorial. Please, if this is your first time of coming across the channel, please click the subscribe button and then enable the notification button so that each time we upload new video, we'll be able to notify you. Okay, we have on the board, we want to look at the meaning of accounting, definition, and the accounting processes. So we're going to start, I'm going to try as much as possible to make the video very brief and also very informative. So I want to start with the definition of accounting. Accounting in a simple term can be defined as a systematic process of recording business transactions and summarizing them in a financial statement in order to enable the users of such financial information to make informed decisions and judgments. So accounting like I said, we're going to look at the meaning, the definition of accounting, the accounting processes, and the users of accounting information. We're also going to look at what kind of decisions that the users, use accounting information to make. So let's start with the definition. In a simple time, as I said, if you look at it on the board, accounting in a simple time is just a systematic process of recording business transactions and summarizing them in a financial statement in order to enable the user of such financial information to make informed decisions. There are several definitions of accounting that you can find in several textbooks. For instance, according to American Accounting Association, for them, accounting is also a systematic process of recording, classifying, summarizing, interpreting, and communicating financial information and communicating useful financial information to the interested users in order to enable them to make informed judgment and decision. If you look at these two definitions, there are three key terms that link the whole definition together. Going by this first definition, saying that accounting can be defined as a systematic process. You can see systematic process. Accounting is a systematic process that is number one. Number two, another key term is financial statement. And another key term here is users. I'm going to explain them one by one. Saying that accounting is a systematic process simply means that accounting has a methodology. Accounting has a systematic way of recording. You don't just record anyhow, but it has a due procedures for recording accounting transactions. This will lead us to another subtopic of looking at accounting processes. There are processes that every accounting transaction must follow if a bookkeeper is to maintain a proper books of what account. And this is the very reason why there's a difference between bookkeeping and then accounting. Bookkeeping is a subset of accounting. Where the bookkeeping ends is where accounting begins. Therefore, there are 5 possible accounting systematic processes that every business transaction ought to follow. And what are the processes? What are the processes? Every business transaction ought to start with source documents. Source documents. Source document. Source document is an evidence of a transaction. It's an evidence that the transaction occurred. It's the first record that it's the first place that transaction or entry ought to be made that will validate that a transaction occurred. Example of such documents are invoice, credit note, receipt, and others. These are an example of such document. So such document is the first place that transactions ought to pass through before entering into another books of account. So after such document is journal. Remember, we are looking at systematic process, going by the definition, systematic process. So after such document is the journal. So in the journal is about looking at the transaction, whether you are going to debit the transaction or you are going to credit the transaction, depending on the nature of the transaction. That's the meaning of journal. Journalizing the transaction is about debiting it. Are you going to debit it or credit it in your account? Then after journal, the next step is the ledger. Accounting processes. The ledger is one of the principal books of what? Account. Having debited or credited the account, as the case may be, then you now transfer open each and individual account in the ledger. If it is an asset account, you open the ledger for it. If it is an expense account, you open the ledger for it. Then after ledger, the next process is trial balance. Trial balance is the list of balances extracted from the ledger. Because having opened the ledger for each individual account in the journal, then each of the ledger accounts ought to have a balance, either a credit or debit balance. So those balances, you are going to extract them and list them in the trial balance, which of course, if the whole entry are being made correctly from the source document to the trial balance, the debit side and the credit side of the trial balance ought to balance if there is no error that affects trial balance that has occurred in the process. And finally, after trial balance is the next process is financial statement. Financial statement. From this place now to this place is where bookkeeping. Bookkeeping ends. From the source document of trial balance is where bookkeeping ends. Then accounting will start from this place, from the financial statement. Of course, we have several financial statements. That financial statement we have income statement. We have income statement or statement of profit and loss account. We have statement of profit and loss account. We have statement like we have financial statement like statement of financial position, also called balance sheet. We have cash flow statement. We also have statement of change in equity. These are majorly for financial statements. Statement of profit and loss account, statement of financial position, statement of cash flow, and statement of change in equity. Then now, from this place, remember that there are five elements of every financial statement. 5 elements. And what are those elements? We have assets, we have capital, we have liability, we have assets, we have capital, we have expenses, and finally we have revenue or income. These are the 5 elements of every financial statement. Assets, capital, and liability are always treated in the statement of financial position, while expenses and revenue are always treated in the statement of profit and loss account. The statement of cash flow takes care of only assets. I mean the current asset, which is cash. It's only cash. Statement of cash flow deals with the movement of cash in and out of the business. Then the statement of change in equity takes care of capital. It's only capital that is treated under statement of change in equity. Of course, you know that capital and equity is the same thing, but in this statement, it deals with the component of equity. Of course, you know there are different components of equity. When you talk about ordinary share capital, you talk about revaluation surplus, income surplus, and other components of equity. So now, these are the, remember we are still working on systematic process. These are the basic systematic process of accounting. It starts with the stored documents, then to journal, from journal to ledger, then from ledger to trial balance, from trial balance to financial statement. So now, this is the first one. Then the second one talks about the financial statement. That accounting is the systematic process of recording business transactions and summarizing them in the financial statement. This is the basic difference between bookkeeping and then accounting. Because bookkeeping will begin from the stored document till trial balance, but there's nothing like summarizing it in the financial statement so as to help the users to make informed decisions about the financial information. But accounting will begin from the stored document till trial balance and finally summarize it in the financial statements to enable the users to make informed decisions based on the information obtained. So you have to know that there are, just as I said before, there are 5 elements of what? Financial statements, as already mentioned. We are going to talk about it one by one when we will be treating accounting equations. So and the last one from the definition is users of accounting information. Now, an accountant having followed this due process and then summarize the whole transaction in the financial statement and then arrive at a point, from the information obtained from the above, he will be able to communicate useful information to the users. And who are the users of financial information? We have first of all, we have the shareholder. We have the shareholders. And what are the type of decisions that the shareholders make with the accounting information? The shareholders or the investors, they are the people that contributed money or invested in the business. And so they expected the financial information to state that the business are making profit. So they need the financial information to know whether they are to continue investing in the business or to withdraw their capital or withdraw the amount they invested in the business. So that's why shareholders are always interested in the financial statement or the information from the financial statement. Another users of financial information are the government. The government needs information of the from the financial statement to know the level of economic growth or development in the country, or to analyze the whole financial health of the entire economy. So government needs what? Government are one of the users of the accounting information. Another users are the tax authority. The tax authority also uses the financial information to know whether the business is making profit so as to calculate their tax payable. The level of the profitability of a business determines the amount that they are going to be subjected to tax in the hand of the tax authority. So, tax authorities are one of the users of the accounting information. There are a lot of users. Another users of accounting information is the management. The management of the organization are also interested in the accounting information to help them, to enable them in their planning, organizing, and directing the business. They are also concerned about the profitability of the business, because it helps them know whether the business is making progress, is making profit, what are the strategies, what are the things they need to change, what are the business strategies they need to adopt. And finally, one other user we also talk about is the employee. Employee are also interested in the accounting information to know the profitability of the business, to know if they are to seek for better pay, or to ask the management to increase their salary. They are also interested in knowing or in the accounting information in order to enable them know whether the management or the business organization will be able to pay them and provide them with better condition of service. So these are the basic key terms in these definitions. We look at the systematic process, we look at the financial statement, and then we also looked at the users of the accounting information. Okay, so this is the breakdown of the definition and the meaning of accounting. And please endeavor, if the breakdown of the meaning and definition of accounting, what accounting actually entails, and these are the users of the accounting information. Please endeavor to click the subscribe button if you are yet to do so, and please like and share. Please, until we meet again, bye for now.